In a move that could further escalate global trade tensions, China has announced an additional 34% tariff on all U.S. imports effective April 10, 2025. The announcement comes just days after the United States imposed new duties on a range of Chinese goods. As the first direct tariff response from any U.S. ally or adversary, the move has sparked growing concerns over the possibility of a full-scale global trade war.
America produces very little things. Okay, it's not like they produce a lot of things and that they sell a lot of things to the world. And it is not like they have actually improved their manufacturing capabilities and then imposed a tariff. So now that they produced quite a small amount of things, it is first going to impact the American export, whatever export that was happening in China.
Beyond the 34% tariffs, China is also imposing export controls on critical rare earth materials vital to industries such as aerospace, defense, and electronics. In addition, it has suspended imports from select U.S. poultry suppliers over health concerns and added 27 American companies to its trade sanctions list, citing violations linked to arms sale to Taiwan. Analysts say these measures strategically target key sectors of the U.S. economy, increasing pressure and rising trade tensions.
They have also put certain licensing requirements or export controls for particular product which is mined most exclusively in China and used across sectors, including the EV. In addition to this, China has also proposed to start an investigation into medical imaging equipments, which US has a global competitiveness, and also halt the poultry imports from US into China. So beyond the tariff, these are some four measures also which China has taken, which has sort of now escalated.
As the US and China continue to trade blows with the retaliatory tariffs, India finds itself in a unique and potentially advantageous position. Experts believe the ongoing tensions could create new opportunities for Indian exporters across various sectors. They also suggest that India could benefit from global supply chains looking to shift away from China, provided it can remain competitive in terms of cost and infrastructure on the global stage.
This trade war has sort of moved the companies more faster to think that they need alternative sources for raw material. If it's China, where they can what could be the other country where they can get raw materials, or what could they be the alternate raw material? In terms of market, also companies are looking at alternate markets, and therefore, particularly if you look at India, what would be relevant is how fast we can look at new free trade agreements which we are wanting to enter into with EU and UK, so that the Indian companies get greater market access to some of these regions.
With both Beijing and Washington holding their ground, the question remains who will blink first. Though officials on both sides have expressed a willingness to engage in dialogue, a clear roadmap to de-escalate is yet to emerge. For now, global markets and businesses remain on edge, watching closely as this high-stakes economic standoff threatens to enter yet another prolonged chapter.